Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. In this case, the footprint charts of Atas, link in the description for more if you want to see what's behind the candle in terms of buys and sells. So as in the hourly candle here, as we're dumping down into the 629 region, we're getting a large amount of sells enter cumulatively, of course. We have 1,000 contracts stopped out here, 1,000 plus.
Fatality.
As the longs got taken for a ride there, and we're seeing some interest generated now to the terms of the buyers still entering. This could be a B to a C continuation to the downside. A lot of buyers still generated here. You might see a little bit more of a sell-off push down as we go slightly lower. Hourly the candle did just close here, so now they can juxtapose what new sellers and buyers can enter. That could be a wick. Do they consider to break down more into the region below? We're getting some wickage. The curvature of the cloud here on the 30-second suggesting that we could be starting to round out. We need to have a narrative shift if this bullish divergence is going to play out. There would need to be some conviction coming up and above this cloud and continuing off of the cloud on this little 30-second burst. This is an Undertaker play by the looks of it. Do we see some conviction here? We're getting some bullish divergence on the money flow of the 1 minute as well on Momentum Master. Oh, by the way, what is this little bit of happiness? Link in the description for more. MomentumMaster.info. If you're new, going down to the features, toggling everything you see in its entirety and reading about each component, particularly the trend cloud and what we would need to break above in order for this shift of structure to even start to form. If we can get above that and start to make a way above it. Starting to see some bullish divergence on the 4 minute as well, getting a double bottom here on the money flow. Bottoming out on the Williams. The MACD still could come down a little bit lower to a region here, but we're here for it either way. Are we going to get a shift up into the open here? This bullish divergence on the 30-second was pretty strong. Can we break the kind of money bag back here too, taken for all of the longs that were interested here? They could have stopped out the minis players and then tested what type of things they have lurking in wait. Let's go take a look at the footprint chart one more time. Getting more generated of buyers here. That could be more fuel to the downside actually. We'll see. Oops. How's everyone doing today? Hopefully good. So, gotta see where the narrative structure shift on this, getting the cross up event of the baselines here, the helix cross here on the 30-second. Is it going to break the cloud and hold it? The super trend on the 30-second has been holding since about nearly an hour ago when we broke down here. So breaking and holding that super trend, the bearish flip of the super trend to bullish would be a potential micro market shift of structure there. It needs to get above the cloud. But the cloud is not shifting its angle. You need to see some conviction in the next minute or two. If you get a rejection here, then it's just another leg down on a descending channel type thing. So we have to get above this if there's any structure to be had that's shifting. 1 minute cloud rejecting, and that bearish super trend up here, I would expect you would reject off of that too. Out of the 4 minute really quick, go back to the 30-second and the 1 minute. How's the audio, everyone? Audio good, hopefully. No doubled up beats or anything like that. So a large amount of buys induced here. They're running out of the sells too, so they might use that fuel to pierce below if they can't get above this cloud. Go do one last test. Back in cold, wet Ireland. Ireland looks beautiful from the pictures I've seen of it. My mom went there. I'd love to go someday. Looks like it'd be a cool place to be. Alright, so we're getting a 30-second close above that cloud. That's one start of a narrative shift somewhere. Beep, 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 beep. So you know for a fact that these sells are most likely shorts too. So if they can juxtapose a bunch of shorts to the longs, then they can reasonably squeeze the shorts and or take the ones that are out of profit because they've taken out a lot of longs from these red in the last hour. So this little bit of happiness here is what sparked my interest, was all of the sells here at the 629 region right here on this little candle. I was expecting some sort of bounce, but they induced a lot of buys after that, so I'm not necessarily keen since seeing all of this blue here. I'd like to see all the red for an idea of longing, because then that means they've liquidated the longs. If we could start to shift out of here, and so that 50, for example, that 50 contracts of sells is most likely shorters peeling off, and or a mini contract player that just took a small scalp, but either way they're off the table to continue higher. So the more sells you see, the more likely it is to have fuel to go up, and the more buys you see at the bottom, the more likely it is to have dead weight because they're countered their position. Buys are counter going up and sells are counter going down. Alright, so we got that shift of the structure on the cloud here. Little mini shift, burst up, came to the cloud, and now we're kind of bursting off of that cloud on the 30-second idea. Rejection on the 1 minute. Let's zoom into the 1 minute so you can see that a little bit clearer. That cloud on the 1 minute is the next resistance point. Baselines that crossed up over here about 20 minutes ago, still holding the price in a nice manner. Getting a cross down on the 30-second though. We broke the super trend though. The super trend, the bearish super trend on the 30-second has had a candle close to flip it. And we're now testing the cloud on the 30-second for the second time. Starting to thin here too. Getting this thinning. Can you hold it? Can you hold? Is there too much dead weight of the long still entering at this level to justify going lower or not? Getting a warning of the momentum shift to the downside being strong there with the do not enter. Audio good? Nice, nice, nice. watches. So to be clear, you do have about 400 or 500 in shorts of the cells here that entered, but you got 1, 2, 3, 4, 5, 6, 7, 8, 9, about 1,000 contracts pinged in the last 11 minutes for buys amidst all of these 2-minute candles here on the right hand side of my chart here. So they keep going to try to hit that 20 region. So we did not get that hold of the cloud on the 32nd, the rejection off the 1 minute. Either way, the bullish divergence did play out from the level of the 19 to 33, so that could have been all she wrote for the bullish divergence. If you're waiting for it to cascade, it may or may not. That could have been all she wrote for a inducement to go lower. One minute cross down flirtation here. We just pull this over like that. And so the 4 minute cloud's still just starting to open up here. You'd have to get a move of momentous occasion to even start to negate that. I was just looking for a slight bounce up based off the bullish divergence. I have no idea where it wants to go. I keep my mind free from all that bias thinking, because your mind is there to trick you into thinking a certain way, which I don't want to do. Just see it as it is in the moment. So the interesting thing was the do not enter and the cross down event here on the 32nd, and the rejection of the 1 minute cloud, which is still pretty thick. Top of this channel, you had some bearish divergence with the money flow burn off here on the 1 minute, and the money flying away symbol, flying away. Now you're getting a cross down event of the 1 minute that it could possibly cascade even lower. It's flirting with the idea of crossing up to on the 1 minute. It's like at that precipice for both. let's go see what's pinged in real quick on the footprints. So less sparse biting on the, there was 76, 51, 76, 47. They stopped out a lot of these longs up here that entered and or induced some shorts, so that's why you're seeing this little jump up here. All right, so contender, can you hold this 30-second cloud and see this angular shift here as the 30-second is angling like in this manner? Can you hold it? And can you cascade to this 1-minute cloud? Is this 1-minute cloud, which is thinning, going to provide a second resistance level? You're just idiot boxing it up as you make a channel going lower right now. Let me go see if I missed something here. Hold up. So you're getting two lower time frames aligned in downward momentum with this finger down here, the 30-second and 10-second, so you don't have to look lower. It's a multi-time frame formula. It's pretty cool. So getting multiple time things lining up to the downside here, breaking the cloud. All right, so getting some more people stopped out. They just keep shaking off the longs. They're like, too many of you guys are entering. Get off me, get off me, get off me, get off me, get off me. They just keep shaking them off. Shake it off, shake it off. They're not really interested in paying the shorts anymore, but they don't want the longs to enter either. They're trying to create an indecision. But one thing you can note is this 30-second cloud. If we just get out of, let's just get to a bigger thing here. So the trend cloud on the 30-second curving in this manner, you have this drop to the downside here, and you're starting to potentially shift it up in a manner here. The 1-minute cloud slightly curving here as we hit once and twice. Are we starting to make some bullish divergence at some point after stopping out a bunch of these longs? Getting a do not enter long symbol, momentum to the downside, getting a lot of down finger rejection off the cloud. We got 10 minutes till the open. Alright, so in the last 2 minutes we saw about 249 contracts stopped out there, getting 123 bought back in, had 141 stopped out prior to that. You can see that with the delta down here on the bottom right by my head. Maybe my head's blocking it, I don't know. Normally you can get this updating live, but I need to connect my Rhythmic account to do so. So, yeah, that's going to be an issue if you want to trade. You can trade on this platform too, but I'm trying to link up accounts, so you can have multiple Rhythmic linked up on here. You just can't have linked up on NinjaTrader and this ATOS platform. That's the problem. Now meeting with resistance on the 30-second cloud as it's now turned lower. This angle shifting, still keeping a different angle from what it was as it was going down, trying to make it less decisive, but still to the downside. Thanks for stopping on in, everyone. Hopefully you kick your shoes off and relax, have a cup of coffee. We got 8 minutes. Yesterday, all of the losses on the live I recouped after the live, but still wasn't the best live stream day yesterday, but it's all in the past, and every trade is not connected to the next, so we just let it go and moved on. Getting a cross up here on the 30-second, coinciding with the 1 minute. Could see a little bit of a stab up. Can the money stack onto the table after stopping out that 300 contracts down below? Okay. By the way, these little green dots with the 3s on them, that's from Momentum Master's stochastic array, just telling you what the higher time frame's up to, so you don't need to look there. So it can take 7 time frames of information and just let you know when these lower time frames and the higher time frames are in alignment, and you can put that stochastic health up here too. So you have the 5 minute, the 15, and the hourly on your side, which is giving you that green dot for potential upside. The oversold nature appears with the green dots there. And it looks like we're getting an Undertaker play pushing up above the cloud on the 1 minute. Can it hold is the question. We have 1 rejection, 2 rejections. Is this one going to be a shift up to the super trend level of the bearish nature up here at 633? Can we hit that and then reclaim this cloud? It looks like we're getting a momentous push up there after that last stop out of the 300 contracts down below. Got 5 minutes till the open. More volatility will likely ensue, but here we go. Oof. Speaking, I said, as I said that, down to 600. Did that stop me out? It most likely stopped me out. Yes, it did. good. It's 1-0 for 1 prior to the stream. Let's go ahead and hit that button. Let's go see what they induce. Yeah, the number of buys that were in this range here was kind of telling of just too much interest generated by longs. They went up and they got 100. Still getting bought in. Let's see. And so that was a severe, they did not hold the cloud at all on that 1 minute. It closed bearish and then immediately broke beneath it with that last 1 second to spare. You had the do not enter long, the finger down, a bunch of other criteria of the momentum pushing you to the downside. So this trash consolidation equals a B wave to the downside. So that was a B to a C continuation idea. If this is your A, then you essentially have this B continuation into a C down. Where does the C stop? Let's go ahead and mark off the hour of power that we're going to trade in first. So breaking the 600 level. What we're going to do here now is we're going to take this entire impulse, trend-based fib level, and then go like this down to there, take it up to here, and what do you know, that hit the 236 entry model, and then dropped down from that. Should have done that sooner. Now you're down to the 1 level. That could be your Undertaker play right there. Not gonna hesitate. Two minutes. So that went down to that 1 level exactly at 592. That's pretty amazing. It's a shame I didn't think to do that sooner. That impulse retrace idea of showing you where that could possibly go, and it rejected off that 236 at 15,627 and went down, boom, to that level exactly. You got about 1 minute for the open to ensue. I do not recommend playing opens. I've gotten chopped up once or twice. You can get it if you're lucky, but a lot of times it's meant to destroy both sides. Let's go see what they stopped out and or induced one last time before we start to look at the momentum. They didn't really stop out so much. They stopped out like 300 contracts down there. 3, 4, 5, 6. Still getting a lot of buys. So they could rip it even lower based off of not really seeing that many sells generated. Let me hide this. 1 more minute. 13 seconds. .47 seconds. basically holding that bearish super trend on the 30-second / cloud. This bearish super trend on the 30-second holding, unless it can break above the 15 region. "17 seconds. Very bad lag. Uh-oh. Lag on my stream? And are we open? Open. Okay. All right, so you get stopped out once. Don't let it scare you necessarily. Should have waited a little bit earlier. It might still come down. This might be a pivot rejection off the 236 again. The first, very rarely does it not pivot on the open. So this could be your second pivot to the downside to continue lower. Pinging both sides of the equation here. So they had a bunch of buys pinged in the last 2 minutes, and looks like they're going to probably take them to the downside. Would be my second stop out if it does. This is holding that 236 too. We may be trending to the downside here. Trend-based fib levels are holding. 574 is next up. That first pivot was a doozy. Now you're getting some stop outs. So you got 264 stopped out there. 117, 93, 118. Yeah, around 2 minute lag. So it's 2 minutes on the stream, like as in like what I'm saying is 2 minutes behind. Says my latency is like pretty good. No dropped frames. It's weird. Well, that stopped me out twice. third time's the charm. If it will like actually freaking move this. Ouch. That was a hefty loss right there. You're coming down to the 200 on the 32 bar slash Yep, lagging the market movement by a couple minutes, not sure why. That's so weird. By a couple minutes? Like, what? Like, literally a couple minutes delay? Like, how is that even possible? Like, I can understand, like, 20 seconds or whatever, but... So at that previous 73 region, they got 400 buys triggered in, and then now they stopped out about 700 contracts there, 321 delta negative after previous, now 2,000 for the session. Hold on a second, let me just check something really quick. It's lagged. I don't understand what this lag is about. I'm using like a, what's it called? I don't understand. Hold on one second. What is causing the... Yeah, it is pretty lagged when I click these buttons or whatever. Hold on. Test, 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 test. So we're at the 546 level. We ripped right through the 1618 and went straight to the 2 of the trend-based fib level, and just no abating in sight. Just straight downside going to the 500 level. If there was one thing, if we go out of this double mode and out of this oscillator, one thing that could have been viewed in retrospect would be this trend-based fib level. If you do this impulse retrace idea here, based on the impulse, the retrace rejection here, the math contained within this impulse retrace had this 236 rejection, not once but twice. You had a double rejection level, and boom, boom to the downside. They tried to come back up to stop out and induce some longs. One of them was me included, and basically got rejected off of the adaptive the entire way down, and holding the, came all the way down to the trend-based fib level, bounced off the 1, came back down to the 1382, whoops, and now coming to a level which is most likely like the 2. Hold on, let me change the settings on here to the 2. That is that, the 2414. Rarely getting to that point. Let's see. Let's change that to like pinkish. And if we go back, so I don't know what the lag is. It's 2 minutes delayed. Wow, that's crazy. 2 minutes delayed. Do they do that on purpose or like what? And it's totally exceeded the value for that bouncing off the 2414 level. I don't know what the significance of that would be. If we go to the pivot low, there's a pivot low from over here. So this is a pivot point from where we previously bounced out from yesterday's play out of here. So we went and completely recovered all of that play from yesterday on Thursday. If I could get this to like straight up move properly. This is I can't get this to move back. Maybe if I do this. It's like so lagged when I click something, it like doesn't. A 2-minute delay. I wish this would zoom in properly here. Maybe I have to just do micro clicks. Okay, so essentially on the 16 bar, we came all the way back to the pivot low, we broke it. Now we're going all the way to like a level of reclamation of a previous pivot out from September 14th. The heavier bar was very thick momentum down. Seeing a slight bounce potential of a relief bounce at the bare minimum. Let's go see what contracts are pinged in here. Large amount, 388 times 1, 2, 3, 4, 5. Yeah, so you had like nearly 1,500 contracts pinged in. And in this bottom range between 520 and 531. They stopped out a fair amount, but overall getting a lot of buys bought in here. There's a lot of interest being generated to go up at this point, so that means it could keep trending lower actually. Not seeing much sellers, so they could be just taking the buyers for a ride now. That's weird that it's laggy. I don't understand what is there like a starting to get a double bottom idea on the oscillator here. Extremely oversold. Could see a slight relief bounce up into some of the super trend levels. Still not seeing any sharp divergence. If you get one more stab down and then you keep making a higher low here on the oscillator, that could be it. Getting a lot of pinged in buys here though. The cumulative, the delta being 500 positive, 600 positive, all of these positive deltas, interests could just be fuel to add to continue to retrace lower to see what type of accounts they're looking to get in their market objective to the downside here. But maybe the buyers are back attempting to get a little bit of a bounce. How is the what's it called, the delay? How is the delay and the audio and everything? Is it still decent? Hourly close in 7 minutes. So the algorithm, after it hits the hourly close, will process what has happened, most likely peek around. Probably this trash consolidation equals that induction to get longs in, that they're going to probably take it a little bit lower on those buyers. And this could be another ABC within the ABC. Did reach that entire 32 bar low region here. The next draw would be at in the 457s after that. On the 8 bar, you're trying to essentially hit the super trend 3 perhaps at 548 for that initial like short stop hit. And that could have been it. That could have been all she wrote. That's why I got that tight. And there you go. It induced that longs and then bounced ever so slight to take the longs DCA demise plan number 1, and then they came back down. And then here's where you start to develop this divergence play. So if you start to see this divergence form, and then you start to make like lower lows on the oscillator here. Let's go into so basically this hourly candle here, you have a lot of up here generated interest. We were talking about a moment ago, you had 2,000-3,000 buys generated within the 529 and 526 region, and those buyers are now getting taken for their objective lower of basically this range here on the right hand side, and now they're going down to stop out those guys and get to some true market objectives of some guys that are up above that they'll liquidate as well. So they had all of those buyers induced up here, hundreds of contracts, and then just taken for the ride lower. And even within this impulse retrace, like, okay, so we cleared that one that we already ascertained, the 236 entry up here idea, so that's done. All right, so let's just take this impulse and the retrace. Trend base fib on this one, impulse, retrace. It's halfway through the impulse, so you had that hidden bearish divergence on the RSI and money flow up here, obviously. And entering the hourly close in 30 seconds. Roll call, who's still with me? I see only 2 concurrent viewers. Who are you guys? Who's watching? Seconds. Hey, smart data. And see, now there's the money bag and the bullish divergence. So we're talking about the consolidation. They trapped the longs, they came back down. That was the bullish divergence play starting to come out here. Little trapperoo. Has a lot of downwards momentum to beat here. Let's go ahead, see what type of contracts. Smart data, do you go by a certain name, another name in the Discord? Who do I know you as generally? I don't know smart data. 590 pinged in there. Wow, at 520. 590 buys. So that is either people cashing out their shorts at the bottom there, closing out their shorts, buying, selling their shorts down there, large amount. That's 1,000 contracts. Ah, I see. Nice. Thanks for tuning in. So there was 766 pinged in at the 504 region on the hourly in terms of buys. You had 587 in the last 2 minutes or 4 minutes ago. Then up top here 590, and then they're starting to come back down to stop out 204. So now you got 4 time frames oversold with the 4-hour and the hourly and the 15 and the 5-minute. Now potentially wanting to see a little bit of a shift. If we go to the 4-minute here, 4-minute saw some massive sell-off volume, starting to get an indecision as you get the move. We talked about earlier the MACD coming lower. It did come lower on the 4-minute now in the Williams range. Everything at the lowest point it can be on the 4-minute. Could be seeing a slight shift up at some stage. That was a massive sell-off either way. Cloud is not showing any signs of abating on the 4-minute here. We just isolate the 4-minute. The 4-minute cloud is extremely thick in nature here. So those 5,000, or not 5,000, the 500 contracts of buys and that 700 and also pinging in at this level, I'm still trying to ascertain what that 766 buys down there implies. Is that a larger player that knows something about that level? I mean, obviously you're getting hundreds stopped out in the last 2 minutes by coming back there too, but with that 500 and that 500 here, does that mean there's a larger interest being generated to see a retrace back up? I've still only used this thing for about a week and a half now. Hey. Alright, so we're getting the kind of reclaiming of one of these baselines on the 4-minute, potentially speaking. The amount of interest generated with the longs down in this region at 786 contracts down at that 504 region. The people that bought could have been the shorts closing in profit, which also causes the need to retrace null and void. They also had 814 close there at 520. So that means we could chill out here essentially. Try to generate some interest on both sides. Getting a lot of buyers up at the top here, 198, 590, and then moving away from that. So that could insinuate that it's not done at its market objective to the downside just yet. I'm just seeing the bullish divergence here on the 1 minute and the 4 time frames oversold and playing it at face value, not just looking at the contracts alone. But the trash consolidation / regression trend here that would be developing could just be a trap to stop out some more and go lower. Not seeing any conviction to hold, just sideways chop, no entry just yet. So one thing to note, when you see these buys and then these spikes away from them, I've just noticed that when there's more generating of buyers at bottoms, then the bottom is not necessarily in. The last time when we were up here just before the open, you see there's all these buyers generated up here in the 612 region, 300, 300, 200, like thousands of contracts of buyers, and we haven't really gone anywhere. So the buyers are new longs, definitely, because they didn't move up that much, so the buyers are not getting stopped out. It's new buyers, so they take them for a ride, douche, douche, and then they come down to a region. And this was around where the open was, and we were seeing some net delta 635, 498 in terms of positive buyers, and then they took them to the downside. Now we're seeing more buyers, and then taking it more to the downside. So you ideally want to see a bunch of sellers enter for the idea of a true market objective complete reversal, because they'll see all these sells as they stop out the majority of the longs. At least that's what my layman's understanding of this is, with doing high block every day too. So each stab to the downside is to stop out, to get sell side stopped out, so they could be basically included. Like when they do shift finally, they're not having to pay anyone, if that makes any sense. So then it's taking off without anyone on board. It's a train leaving the station with no one on board, so they don't have dead weight. And so we're seeing this massive drift to the downside right now. This continuation on the 16 bar. Coming to the next objective perhaps at 461. There's a little draw of liquidity there of this previous shift out from September 14th. Give me a moment, I'm gonna grab a drink real quick. Okay, I'm back. Sorry. Okay, so we're essentially just drifting lower. It's been about 15 minutes of just slow drift to the downside, as you see in this regression channel. The longs that were generated there at the 500 level, they have a lot to drift down further with. These baselines not stopping just yet on the 4-minute cloud, mighty thick on the 4-minute too. How is the lag? Is it still 2 minutes delayed? So they're getting a bunch of massive sell-offs here. I like it. 3, 6, 9, 12, 2,000 plus contracts from the 487 down to 472. A bunch sold off, minus 469 contracts in the last 2 minutes. And there's some more bullish divergence forming, continuation. back at the 500 level, perhaps. You still have a long way to go. This entire 32 bars, there's 26 bars of downside. And on the 16 bar, you had initially 14, and then retraced up a little bit, another 15, retraced up a little bit, another 23. So So that little dip to the downside could have wrecked those 700 plus accounts that opened into the hourly close. And they did it twice to be sure. They did a little ABC within that, a dollar cost average destruction. And so you could see this little D wave out off the fuel of that to then go stop out some of the shorts. They did have a mighty rip to the downside, so a retrace up would make sense at some point. Starting to see a possible reclamation of the baselines here on the 4 minute. You're outside of the Keltner channel. You could come back into this. It's kind of like a Bollinger Band. If you come out, you tend to come back in into the unknown. You had a previous nuke that played out earlier today. I was working, and that's the power of the stochastic array. How's the lag? Anyone there to confirm whether there is or isn't lag? I'm gonna probably cut it short to kind of ascertain what's the deal with that. I don't know if that's like market data stuff or why that would be delayed by like 2 minutes or whatever. It's kind of weird. You're starting to get a cross-up potential on the 4 minute if it holds this region. So at the start of the hour, they pumped up and then they basically trapped like that 1,000 contracts of buyers, and then they took it to the downside. And then what you want to see at the true reversal would be a bunch of sellers down at the bottom, buyers at the top. So the more buyers you see generated in their current price action, the more likely it is to fade. So in the last 6 minutes, you're seeing a fair amount generated to the tune of like 1,000 contracts of buys. Are those shorts closing, or is that more likely some longs entering in? If there's more longs entering in, they're likely to go back and test those for the sellers. You had previously down here about 500 contracts sold off at the bottom there at 469. And this is what the delta is about. Cloud is starting to shift here on the 1 minute. Interesting to note the curvature of that with the adaptive moving average here. Are you going to break above it? Looks like you are. If you start to break above and then reclaim, this is where you can start your narrative shift pullback idea. On the 8 bar, you had a shift pullback at the 50 SMA, broke the super trend 3, could be going to the draw of liquidity on the 8 bar up to the 520, 531 region. That bullish divergence starting to finally kick in. And the cross-up event on the 4 minute, as you see here with the baseline starting to confirm price action above the baselines on the 4 minute. You previously had a cross down event up here about 2 hours ago, insinuating the downside, now starting to get the potential of that closing with the cross-up confirmed in 13 seconds. Does that mean it happens at the exact point in time? Not really, but it does mean you need to take heed if you're in a short. It did lock in, so that is confirmed. You did have a dud of a confirmed up before it crossed down, so it doesn't mean it's definite on that time frame, but they are to take note. Now starting to see that shift in structure. Moving up on the 1 minute. Coming back to the Keltner channel on the 4. And these pullbacks are to stop out the trailing stop loss people and or over leveraged with their trailing drawdown in effect. Rejection off the 1 minute cloud, never made it to the super trend level just yet. Cloud on the 30-second also still thick, but starting to thin out and curve in a manner here. Getting a full-on bounce off that 30-second cloud, potentially speaking. Where would that be on in terms of the Fibonacci here? That was your equilibrium right there of that impulse out at 491. So if you see that reaction off the equilibrium, then it could be the push up at that time. Getting the thinning of the cloud, it's make or break time for this level. Looks like it's breaking. Next level beyond that is down there at 486. Giving you those do not enter warnings of the momentum shift there on the 30-second. I noticed this on the 1 minute and then on the 2 minute as well. When you get the cross up event like you did here on the 4, it like comes back down for a double bottom. If there is a genuine event, then you have the first one and then you have a second leg down for the double bottom, but this is just going straight for the draw. They must have pinged in some buys there. Let's see. Hold up.
Phrase.
2, 4, 6, 8. The last 8 minutes had a bunch of buyers. 4, 5, 6, 7, 8, 9. About 1,000 plus. So they tried to go back for the stop test. And this reaction is off of the 706 level right now. Getting a bearish retest of the cloud as it broke down at it. Hold up, let me delete this really quick. So the 30-second cloud getting that thin. The thin doesn't always mean reversal, it can mean expansion. If you get that bearish retest of the cloud and then you break beneath it, the line in the sand. And the 1 minute cloud still doing its thing.
Word. Phrase.
I mean, essentially it's just chopping up right now. The move was into that open drop, that first pivot to the downside. Give me a second really quick. All right, so it's fading off of this this retrace idea. So this is basically at the last stand at the 706/786 level. You notice on my fibs, I switched the templates from equilibrium. When it fails the equilibrium, you can do like a fib pocket region at the 706, and then when it goes deeper to that, I have a deep one. I have these adjustable in the moment because I don't want all of these like visible like this. It just looks kind of messy, too many colors, so I have just what it's showing at that time. You can save these templates. I find it to be useful, so it eventually just at the deep retrace it decided to shift out a little bit for that second attempt at the stab at the cloud. You have about 844 buys at that 500 region. Still a fair amount of buys generated here in this overall area. Not necessarily sold on the idea of this being the reversal point. There's just a lot of buys generated here. This is either the shorts cashing out, which could cause consolidation to continue, and or the buys, if there are longs entering, then basically it could keep going. The session delta is still positive 2,000 contracts. Even as we're approaching 500, we're up 2,000 contracts for the session. In just the last 13 minutes alone, we went from positive 875 contracts to plus 2,000. So there's a lot more buys being generated here than sells. Just to be aware. But those buys could also be the stopping out of shorts. So if they don't want to pay the shorts further, they could also surge up and then they'd get their buy side liquidity goals meet. If they already met the sell side, like if the sell side, if going lower does not give them more sells, they could just be going, they could have liquidated their targets of the longs too. So the buys that we're seeing could be the shorts cashing out. Reclaiming the 30-second cloud here and the adaptive moving average. The adaptive can be read about there. A sensitive yet stable moving average which factors out noise and displays an accurate place where the price will experience resistance or return to for support. So we're starting to reclaim that. Still having trouble on the 1 minute. The cross-up event of the 4 minute rather is still subtly doing its thing. So you were saying that the market movement was lagged by a couple minutes. Is that lag still being experienced right now? Could somebody please confirm? All right, seeing a possible reclamation. Still has a long way to go. How can there be more buys than sells while you need a buyer and a seller for each transaction? Aha. So So if you market buy out, maybe there's slippage? That's a good freaking question, actually. I have no idea. I wish I had an answer for you on that. I'm not going to even lie that I know the answer to that. But if you need it for every trend, well, I know that the market makers cover. So if there is nobody trying to sell at that level, then they basically take that and just execute it for you. That's what a liquidity provider is for. So the liquidity providers provide the lubricant, the oil for the market to move. So if there is no buyer or seller at that exact price point, they'll execute it anyway. So I'm going to imagine that each one of these is done separate. And the person who's executing the other side of this buy is the market maker. And they're providing the liquidity to that smooth lubricant to allow this 118 buys to enter without another person on the other end. And then there's 147 sellers here, but if there's not 147 buyers, they're not going to say hold on, they're going to just execute it. So basically, if I'm not mistaken, then the liquidity provider is the person who's executing both sides of the equation, and that's where they're using their algorithm to take the imbalances out. So if there's more buyers than sellers, then they need to go lower to make them sell at a lower price so they can recoup that loss of executing for them. So they'll allow them to execute, and they'll execute these buys, and then they'll be like, well, there's nobody selling, so I guess we got to go lower to make them sell, to scare these guys who executed, to have them execute at a loss, and then we'll recoup the profit. And that's the whole idea of what a liquidity provider is about, is recouping that slippage. Hopefully that makes sense. So the other person on the other end of the execution is the liquidity provider, long story short. So I guess I did know the answer after all. And here we go. And so that's why if we're seeing that there's more buyers, the delta being more buyers, then they're going to generate that interest to sell by going lower so they can recoup the profit of executing it at that price. Because they're not going to want to send the price up so they lose money. They would send it down to force a sell-off so they can recoup that loss. So like, okay, we'll let you buy here at $4.90. Yeah, whatever, if you want to do that. Nobody's selling. Okay, we'll just let you buy. Imbalance to buys. Okay, buys want to buy here. Cool. send it lower, and then they make them sell off, and then they're like, ah, transaction complete, we fulfilled both sides. And they just make their bank shifting the algorithm to move the price up and down to generate the interest. And then if you go to high block has the carrot on the stick to cause the orders in the order book to appear at certain regions which gravitate the price to go fulfill the order. So that's something that's a different depth of market indicator. That's not executed orders, but resting orders and all that stuff. That's a whole other level. The resting orders of bookmap. The high block is also resting liquidation points. But the footprint chart of ATAS is where things were actually executed. So this is where people actually bought and sold. So based off of that information of where people bought and sold, you can see imbalances form. Like, okay, there's a lot of buys being generated here more than sells. Maybe this is where they're going to send it lower, because in order for them to recoup that money, they would have to go lower. The market makers, anyway. So there's a 2,000 contract buy delta at 500 now, so they could be sending it to the downside some more. Looks like they are. They keep going up to that 500 level and then coming back down. Makes sense? Yeah. I mean, I knew the answer, but at the same time when you asked it, it was like consciously not registering. But the more that I thought about it, I was like, oh, no, I know this. It's the freaking liquidity providers. The liquidity providers provide the lubricant for the market to move. That's why they're called market makers. They cause the movement of the market with their algorithms and whatnot. So they generate an interest, and then there's an imbalance in the interest, and then they move it in the direction that will cause them to profit. In this case, to the downside, to cause the sell side to take out those buyers that bought at a high price, which they don't know at the time because the imbalance doesn't know it's even being generated yet. So they generate an imbalance, and then they go shift to that imbalanced direction. So if you see more buyers in a region, don't go long, and if you see more sellers in a region, then consider going long. More buyers insinuates downside, more sellers insinuates upside. That's why you have the sell side liquidity below and the buy side liquidity above. The longer stops are below and the shorter stops are above as buys. So they just go for the stops, which are forcible ways to reconcile the imbalance. And so the price action is the distortion between the imbalance of where the generated interest is had. It's pretty cool. The price action is like corollary to the imbalance. So that's the idea of what the footprint charts to me seems is like. You look at where it says like there's 2K in buys generated here, and then the last 15 minutes we saw 1,000 contract imbalance of buys, and then they went and shifted it to the downside as a result. And so now if I update this, it's going to tell me that the delta is now 1K. So they just basically sold off 1,000 contracts there. And so the buys that were generated up here just got stopped out. And that's for the session, but it shows you the cumulative volume delta, and that's what the CVD is the volume delta of what the balance between the buyers and the sellers is. And so this is between each candle, there's like 137. And then if you go back, like if I look at this hourly chart, for example, on the left, if I zoom out here and just turn them into candles, like I'll just go to the 15-minute really quick. Boop, boop. So you can kind of see like cumulative volume delta volume bars here that will tell you where the total for the session is at, and then you can get CVD divergences within that too. Divergence plays out on the volume. So for example here, we're making a lower low. If we go and get a trend line here, we're making like a lower low. And then here on the volume delta, well, we're not really making it still in line with the delta dropping here. If we were making like a higher delta, then you could do this off of the divergences of this cumulative volume delta bars. It's not showing it right now, but you can use divergence off of the cumulative volume too. And so when you see all these stopped out contracts here, that's the imbalance reconciling itself. So now we're back to 940 session delta volume candles in the positive direction. So they need to reconcile and bring that to zero. And then they'll eventually go negative, and then that needs to go. So the fact that it's positive as we're dropping means there's more buyers being generated on the way down, fueling this drop to continue. And I'm learning this. It's fascinating. I'm still learning and growing as I observe this stuff. So it's interesting for me. And we have negated that impulse completely. Downside, more inbound. All right, so I think that's about it for me. We're reaching the end of this hourly journey, hour and a half journey on Friday. The hourly will close in 10 minutes. So until the buyers stop generating interest, the basic draw is to continue lower to reconcile that delta imbalance. And the next draw is at the 45, where is this? The 53 region, 50. And this could just keep slow bleeding out to that region. Massive 32 bar drawdown there. We'll keep you posted, ladies and gents. I think this is just continuing on its merry way to reconcile the imbalance here on the delta of the number of contracts. Let's see how much they're stopping out here. Down to 800. And so every buyer that enters here just becomes fuel to bring it further down to test where their true market objective is. So there's 309. You can see in that one candle, 309 were stopped out. 159 stopped out cumulatively. 214 stopped out cumulatively. Sell, 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 sell. $244 stopped up at 450, continuing lower. Now we're at a session delta of 389, so we've reconciled that 1,000 contract imbalance. All right, ladies and gents, thank you for stopping on in. Once again, if you're wondering what the indicator suite is, the link is in the description, same with the footprints chart. All the stuff in the description for more. And thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. And we'll do the same, bringing the fire, the action, the precision, all that fun stuff. And we will catch you next week for the Nasdaq futures on Monday. And trade safe out there, and we will catch you later. Peace.